Welcome to this week's Crypto Roundup. In today's recap, we cover the SEC's approval of spot Ether ETFs and their significant market impact, Kraken's distribution of Mt. Gox Bitcoin to creditors after a decade, the launch of a documentary on Ethereum co-founder Vitalik dYdX's plans to sell its derivatives trading software, Swan Bitcoin's cancellation of its IPO and closure of its mining unit, BlockFi's completion of FTX creditor distributions, Jito Foundation's release of an open-source restaking service for Solana, and a surge in Aave's price following a new governance proposal. Thanks for tuning in to the weekly news recap. Let's begin. CC approves spot Ether ETFs. Trading begins with high activity. On Monday, the U.S. Securities and Exchange Commission gave its final approval for several spot Ether exchange-traded funds, setting the stage for their historic launch. This approval comes roughly 6 months after the SEC greenlit 11 spot Bitcoin ETFs, indicating a significant regulatory shift. Trading of the new Ether. ETFs began on Tuesday with remarkable activity. The Grayscale Ethereum Trust, ETH, generated nearly half of the $1 billion total volume. Other notable performers included BlackRock's iShares Ethereum Trust and the Fidelity Ethereum Fund, which recorded $266 million and $204 million in inflows, respectively. On the second day of trading, the ETFs generated $937 million in volume, with Grayscale, BlackRock, and Fidelity leading again. However, there were $133.16 million in net outflows on Wednesday. On a negative note, the market has reacted quite negatively. On Wednesday, the price of ETH fell 8% and at the time of recording is trading below $3,200. On that day alone, there were $290 million worth of liquidations in the market. The price is now at a level similar to the one before the ETF approval was announced. The historic launch of spot ETFs in the U.S. coincides with concerns over Ethereum's growing supply. Since April, Ethereum's supply has risen to 120.2 million ETH, its highest level since November 2023, due to reduced ETH burning and declining Layer 1 activity. In the past 30 days alone, the supply increased by 59,312 ETH. This trend challenges the ultrasound money narrative, which suggests ETH could be deflationary. Despite this, the amount of staked ETH has reached a record 33.7 million, potentially mitigating selling pressure and supporting ETH prices. Kraken distributes Mt. Gox Bitcoin to creditors after a decade. For the first time in 10 years, some creditors of the now-defunct Mt. Gox exchange have received their Bitcoin and Bitcoin Cash. Crypto exchange Kraken announced on Tuesday that it has successfully distributed these digital assets from the Mt. Gox estate. Kraken CEO Dave Ripley wrote on X that it's been nearly a decade since Kraken was selected by the trustee to facilitate the investigation and return of client funds. It was our privilege and it was our duty. Something notable about these repayments is that they happened on the same day the Ethereum ETFs were launched in the US. Therefore, the market saw a bullish event, the ETFs, and a bearish one at roughly the same time. Kai-Young Ju, CEO of analytics firm CryptoQuant, observed on X that there was no significant spike in trading volume or Bitcoin outflows from Kraken immediately following the distributions. However, there was an increase in outflows during Asian trading hours. Bitstamp, another exchange involved in the restitution process, received $340.1 million worth of Bitcoin on Wednesday and is set to distribute more funds to creditors. The distribution marks a significant step in concluding the lengthy Mt. Gox saga, which began with the exchange's collapse in 2014. In related news, a wallet associated with the U.S. government transferred nearly $4 million in Bitcoin, seized from Silk Road vendor Ryan Ferris, to the crypto exchange Coinbase, likely indicating its intent to sell. Supporters can mint Vitalik documentary trailer to fund release. On Tuesday, the Unchained minting of the trailer for the documentary Vitalik, an Ethereum Story, went live, inviting crypto enthusiasts to fund the decentralized release of the film in theaters and on streaming platforms. The documentary chronicles the last 3 years of Ethereum through the eyes of its co-founder, Vitalik Buterin, focusing on pivotal moments like the merge, which transitioned the network from proof of work to proof of stake. The film, part of the Ethereum Story series, highlights significant events in the crypto space, such as the creation of Constitution DAO's bid to acquire a copy of the U.S. Constitution. What I hope is that this is the perfect time to be telling stories that are human in the space, because there's this big global spotlight on Ethereum, said director Zach Ingrasci. The documentary's world premiere is set for September 18th. Ingrasci emphasized the unique funding model, stating, "With the mint of this trailer, we can actually power the distribution of this film and series. That's so unique to the crypto space." The project has already raised over 1,036 ETH, around $3.2 million, through a crowdfund, supported by more than 660 contributors. dYdX considers selling derivatives trading software. Meanwhile, Hashdex filed an S1 registration with the SEC for an ETF that will initially hold Bitcoin and Ether, with the potential to also include other assets, pending regulatory approval. Decentralized finance platform dYdX is negotiating the sale of its dYdX V3 derivatives trading software to a group of prominent crypto market makers, including Wintermute and Selene Capital, according to a Bloomberg report. The deal, advised by Perella Weinberg Partners, aims to transfer the software for an undisclosed amount, according to sources familiar with the matter. Launched in 2017, dYdX allows users to trade perpetual futures contracts for various cryptocurrencies. The platform transitioned to its own blockchain with the V4 software last year, though the V3 version remains popular due to its high liquidity and low slippage for large transactions. Shortly after the news broke, dYdX reported a security breach on its V3 website, advising users to avoid clicking on any links until further notice. This incident does not affect the V4 platform. Hours later, the team noted on X that the issue was resolved. Swan Bitcoin cancels IPO plans. Swan Bitcoin has scrapped its plans to go public and is shutting down its managed mining division, leading to layoffs in various departments. CEO Corey Clipston announced that due to the lack of expected revenue from the mining unit, the company had to abandon its IPO. He noted on X that Swan is scaling back its spending on core financial services, which regrettably includes staff reductions. Despite these hurdles, other mining companies such as Genesis Digital Assets and Northern Data are still aiming to go public. Previously, Swan's mining unit operated with 160 megawatts of computing power and secured over $100 million from institutional investors, including stablecoin issuer Tether. Now, the firm will concentrate on offering Bitcoin-related financial services and educational resources. BlockFi finalizes FTX creditor distributions. Defunct crypto lender BlockFi has completed the sale of its FTX claims, significantly exceeding their face value. This transaction, finalized with an undisclosed third party, will facilitate the final distribution of 100% of eligible customer and general unsecured creditor claims in fiat terms. BlockFi plan administrator Mohsin Y. Megji reported the sale to the U.S. bankruptcy court, noting that the sale process, which began on June 24th, concluded on July 10th with the best possible bid. The substantial recovery from the sale enables BlockFi to wind down its operations and distribute funds to creditors sooner than anticipated. The final distributions will commence very soon, with fiat claims managed by Kroll and digital disbursements, and in-kind crypto distributions to be processed via Coinbase. Jito unveils open-source restaking service for Solana. On Thursday, the Jito Foundation released an open-source codebase for staking and restaking on the Solana network. This service, the first of its kind for Solana, allows any protocol to use different assets for economic security. Restaking enables blockchain networks to leverage the value of staked assets as collateral in order to maintain network integrity. Jito's new code aims to facilitate this for any Solana-based application, termed as actively validated service. Unlike EigenLayer's Ethereum-based restaking, which limits collateral to ETH and certain derivatives, Jito's code permits using any crypto asset to secure AVSs. Aave token jumps on proposal for new tokenomics. The price of Aave, the governance token for the largest decentralized finance lending protocol, surged 10% on Thursday, following a new governance proposal aimed at updating its tokenomics and hitting a 2-year high in the amount borrowed. The proposal suggests a roadmap for implementing a fee switch for staked Aave, turning it into a liquidity sink to collect rewards from protocol revenue. If approved, the new buy and distribute program will purchase Aave from secondary markets to distribute to the ecosystem reserve, creating consistent demand for Aave assets. The proposal will be open for community feedback before moving to a snapshot vote. And that's all. Thanks so much for joining us today. If you enjoyed this recap, go to unchainedcrypto.substack.com, that is unchainedcrypto.substack.com, and sign up for our free newsletter so that you can stay up to date with the latest in crypto. Unchained is produced by Laura Shin, with help from Matt Pilchard, Juan Aronovich, Megan Gavis, Pam Majumdar, and Margaret Correa. The weekly recap was written by Juan Aronovich and edited by Nelson Wang. Thanks for listening.
Unchained is now a part of the CoinDesk Podcast Network. For the latest in digital assets, check out Markets Daily, 5 days a week, with host Noel Atchison. Follow the CoinDesk Podcast Network for some of the best shows in crypto.